Good morning, students. We are on chapter number 6 of account part 2, convention, assumption, concept and principles of accounting. Today in this lecture we are going to talk about the prudence concept. Friends, according to this concept, there is always a preference of understatement of revenue or asset rather than overstatement when dealing with the measurement of uncertainties. At the same time, there is preference for estimating higher number of liabilities or expenses when dealing with measurement of uncertainty. Also, anticipate no profit but anticipate all losses and provide for them is the suggestion as per this concept. Let us see in detail. Prudence concept. This concept is also referred to as conservatism concept by some author. Financial statements are usually prepared on conservative basis. Window dressing of accounting, that is showing performance or position different than the actual one, is not permitted. In other words, showing a position better than what it is not good. At the same time, it is also not proper to show performance or position substantially worse than what it is, and thus create secretism. Prudent reporting based on conservatism builds confidence in the results and in the long run best serves the interest of all stakeholders and users of financial statement. This policy of prudent reporting leads to the concept of prudence or conservatism. According to this concept of prudence, an accountant does not take into account anticipated gain or profit but provides for all anticipated loss. Based on this concept, there is preference for understatement of revenue and or assets rather than overstatement when dealing with the measurement of uncertainties. At the same time, there is performance for estimating higher number of liabilities or expenses when dealing with the measurement of uncertainties. This concept is also stated as anticipate no profits but anticipate all losses and provide for them. The two aspects of prudence can be stated as under: number 1, recognize revenue or gain only when they are reasonably certain. Second, recognize expenses or losses as soon as they are reasonably possible. Let us take some illustration to understand this. Closing stock is valued at cost or market price, whichever is less. Friends, in the chapter of final account we have seen this. Closing stock is valued at cost or market price, whichever is less. For example, if cost of closing stock of inventory is rupees 20,000 at the end of the year and its market value is 30,000, the closing stock will be valued at 20,000. At the same time, if the cost price or cost of closing stock or inventory is 20,000 at the end of the year and the market value is 17,000, the closing stock will be valued at 17,000. Here anticipated profit of rupees 10,000, that is 30,000 less 20,000, is not taken into account as the same is not actually realized. However, anticipated loss of 3,000, 20,000 less 17,000 is taken into account when we value closing stock at 17,000 against its cost of rupees 20,000. Okay. Second illustration: provision for doubtful debts is made in the accounts. Based on what? Based on prudence concept. Provision for discount reserve on debtor is made in the accounts based on prudence concept. Provision for discount reserve on creditor is not made in the account based on this concept, prudence concept. What else? Contingent liabilities are shown in the balance sheet, whereas contingent assets are not shown in the shown therein. Provision for reduction or erosion in the value of investment is usually made in the books of account. When goods are supplied on sale or return basis, the revenue is not recognized till the confirmation is received from the buyer for having agreed to purchase the same. In case of long-term contract, when the work complete is very less or negligible, say less than 25%, the entire profit is reserved for future contingencies and is transferred to the work in progress account. In other words, no profit is taken into account or profit is ignored for such long-term contract where very less or negligible work has been completed. However, if there is any loss, the same will be taken into account. All research and development expenses are usually debited to profit and loss account of the year in which they are incurred, even if the benefit of such expenses is derived in future. Provision for loss of theft of uninsured stock will be made in the books of account soon after the theft, even if it is possible or there is possibility of recovery of this stock if police catches the thief. Bank credit interest on doubtful advances to insert suspense account and not to interest account. Recovery of interest on doubtful advances is uncertain and hence based on prudence or conservative concept, instead of crediting the same to the interest income, it is credited to interest suspense account. So these were some illustration of this concept. Banks whose main income is from interest, but those interests which are doubtful are credited to interest suspense account and not to the interest account, because they are not received yet and they are always doubtful till they are received. Okay, so this was all prudence concept. Next lecture we will talk about cost concept.